Hey, welcome everyone. And this is another episode of Going Elliptic, and we're live chatting again with all the correction turmoil that's been happening in the crypto markets this last week. A few things to remember: this is not educational. This is educational advice. It's not investment advice. And yeah, we really hope that you'll join us in the chat. Like, subscribe, or ask any questions, or make even requests for assets you'd like to see us charting. Hey, Shanky.
Hey, Paul. How are you doing?
Yeah, pretty good. Obviously, keeping one eye on the charts at all times at the moment. It's very unpredictable.
Oh, it surely is. I think the markets have been in turmoil and full action, as you mentioned, and it's good for us to step back and see what's going on and where it might be headed.
Yeah, no, great timing here. End of a week. We can look back on both where we were at last week, a week ago, or even going 4 weeks back. I mean, it's not too different. A lot of the prices there, we sometimes forget that when we're tracking things hour by hour or day by day, but roughly the markets are where they were 30, 35 days ago.
That's correct. That is correct. Yeah, and we'll study that. We'll go through it. We'll study that. And as you rightly mentioned, I mean, for the audience, if there are questions, bring it on. If there are particular tokens that you are more interested in, well, chime in, let us know, and we'll try and cover it. Right? That's the plan.
Excellent. And we have had a few assets requested from our Twitter followers. So yeah, those will be coming up. What's the basic rundown of the assets we're going to chart today, Shanky?
Yeah, so we'll look at the majors. That's where we should start. Again, BTC and ETH, and largely BTC sort of leads the way. And of course, ETH is now a big asset on its own right. So I think looking at those two is just the right thing to focus on first. Make sure, try and see where they are with respect to the larger crypto markets and what's happening there and what does it look like. And once we have studied that and understood the market direction and the market structure, I think it might be worthwhile to look at a few different categories, if you may, or sub-asset classes within this larger crypto asset class. So looking at the alts, the challenges, essentially all the new chains that have emerged, right? And they've all gained a lot of momentum in the last few months, especially in this bull run. We should look at those, some which established, like the BNBs and the Solanas of the world. And then, of course, the newcomers like Runes and FTMs. And maybe we'll even touch upon things like Matic and others, which are more layer 2, but they are sort of, eating from the same pie to an extent. Yep. Right? So we should definitely look at those. Then I think after that, the other piece to look at is definitely DeFi, right? So to remind our audience, if you think about DeFi bull run in some sense, or the DeFi run started way earlier than the current bull run, the more broader bull run. DeFi really started getting traction last summers, 2020 summers, and since then it's been an upward journey. Now, of course, part of this larger bull run, price action on each of the ones that we have listed, Aave, Maker, Synthetix, SNX, or Link were quite prominent, but also newer players emerged. Players like Ray, players like a bunch of others. There's just Pancake Swap and so on and so forth. They all sort of benefited from that larger DeFi story or DeFi narrative. So we look at where DeFi is. What's happening with the world of DeFi. There also has been a lot of conversation around this whole sort of CeFi, DeFi, and traditional finance becoming DeFi, isn't it?
Yeah, absolutely. And I'd say everyone that joined in on that kind of DeFi narrative prior to February this year was probably pricing in what DeFi was currently capable of. And then I think perhaps we went too far and people started pricing in the future of DeFi. And perhaps where it's going to be towards end of this year or start of next year. And maybe we got ahead of ourselves a bit too much there on that narrative.
Possibly. And, that's always a side effect of a, raging bull. So
yes,
people get carried away. Yeah, for sure.
Great. Well, let's jump into those first ones, the majors, because, that's obviously where people still have, fair amount of their money tied up, and obviously we hope that nobody's putting their whole life savings in, because that is definitely not the way to play in crypto. But for what you do have in there, it's interesting to see where it's at compared to the fundamentals. So some of those indicators that we've obviously been looking at in each show around the moving averages, we're well below both EMA 50 and EMA 200.
Correct. Yeah. And usually, these EMAs serve as good trend filters. So if you saw during the bull run when things were really gaining momentum, the parabolic rise, things were not only above EMA 50, but above EMA 20, which is the short-term EMA, right? Just a 20-period EMA. And on most time frames, especially on the daily time frame, it just looked like an absolute parabolic rise. So no two ways on that, and that's getting questioned now, right? We see that EMA 200 was breached on May 19th with that major fall, and ever since it has almost become like a resistance. The price is unable, especially for BTC, to go above that EMA 200, thereby possibly signaling that, hey, are we entering into bear territory, right? I must mention, though, technically speaking, just purely from a technical hat, forget the emotion around it, it's too few candles to really give that verdict yet, right? Like it could be a pullback, it could be a fake out. It's been about 3-4 candles on a daily time frame, and things could still reverse, right? So it can happen that this was a short-term pullback. Those are possibilities. I cannot rule them out just purely from a technical standpoint.
And when we're looking at the volume histogram at the bottom there as well, the candles that we're seeing these last 7 to 10 days, the sticks there are still lower volumes than what we were seeing, say, back in January and February even. So, it's less conviction for some of those pullbacks. So perhaps we will see, the green returning back to some of these charts.
It's possible. It's surely possible. One must remember, though, there is a lot of narrative, a ton of narrative online, especially on crypto Twitter, that, we know how this plays out. This is what happened in 2017. This is what happened in 2013. While sure, there are some commonalities, it's not completely untrue. There are some commonalities in terms of BTC leading the way and then the alts joining, and then when the alts do get overheated, the market tends to start shedding. So sure, some of those narratives hold some weight, right? I wouldn't totally rule them out. But one must understand, and this is an important thing to understand, that the world of crypto trading has changed drastically over the last couple of years. And what I mean by that is both the types of players and the types of instruments and the way crypto is being traded is very different. And when I say very different, means substantially different. They're like day and night differences compared to 2013, and certainly very different even from 2017, right? So the things I want to point out is, firstly, in 2013, the basis itself was very small, right? You were looking at BTC, which was like, maximum of $1,000, right? It was a sub $1,000 BTC for the most part. And even when we went in 2017, where we did see BTC, go as far up as $20,000, it did not stay for too long near the 20,000 mark. For the most part, it did stay closer to, the 10,000 and, in that range, right? Like even through its bull run, of course, peaking out at 20 and then rapidly falling back, right? So I think the amount...
I don't think we spent longer than 4 weeks above 10K BTC in that period.
Exactly. And what that really means is that the amount of capital at play was very different. It is orders of magnitude different, right? So that's one thing to remember. The second thing to think about, Paul, and you've been around very long, so I'm sure you can kind of chime in with your own experience, is 2013 was all about retail small traders, because it's still experimental, right? It was still not mainstream crypto to an extent, right? So people were trading from their own purses, personal purses, if you may. 2017 brought in maybe some call them crypto native institutions, right? Few of them started coming in. But now they are the lion's share. There are a lot of big funds, well capitalized, wealthy funds sitting on a lot of assets that come and trade, right? So that's also different. And then last but not the least, 2013 was almost entirely a spot market, right? It was
Yep.
all of it happening in the spot world. 2017, the likes of BitMEX and a few others were already around, but their impact was still smaller. It was not as much. Now most people don't see it. A lot of retail things, yeah, Bitcoin price goes up and I'm going to come in this and become the the multi-millionaire or billionaire by just holding it long. But the reality is that a lot of these volumes, a lot of this price action really is being governed by what's happening in the world of derivatives and what's happening in the world of futures, right? So that's something to bear in mind. And not only just futures, but also in terms of spot, there's a lot of margin trading going on, right? So overall, this
Yeah.
whole universe is leveraged. Crypto world is very, very, very leveraged, right? So that's something to
And
kind of think about.
that adds a lot of fragility when we have sharp corrections in the market, right? It's, I'm seeing a lot of things showing evidence of that kind of cascading sell-off, because both the leveraged derivatives traders and the margin spot people had to sell at a loss, and that just keeps cascading down, no matter what size of kind of money you're talking about there. Some people can be using leverage even with small amounts, and lose it all if they're liquidated.
Oh, 100%. 100%. You're 100% right there. Also remember that, leverage multipliers have also become very big, right? So now there are so many venues that offer you 50x, 100x, 150x, 200x leverage, right? So you are right. You can go with small change and take a massive position either way, long or short, right? Um, and that means that, one, you are going to impact the prices in a much bigger way than you could, right, if you were just playing on spot. And secondly, if the market moves rapidly, yes, you are also, because you're sitting on such high leverage, you're going to get liquidated very quickly, right? And so therefore that will also have an impact, right? So both ways, going up and going down, I think we have seen a lot of sharp rise up and a sharp fall, right? A lot of cascading effect going on, and lots of big moves. And definitely, I think futures are playing a big part of that puzzle. I mean, there is a massive impact of that I think a lot of retail traders are still not grokking. They're not totally understanding it. Many of them are aware, but they're not completely understanding it, I feel.
Yeah, and another thing I think that's a little bit different was in 2017, 2018, if you had your kind of assets on Ethereum or in a few different tokens, it was going to take you a significant amount of time to actually sell out or to find liquidity to exit some of those assets. You probably did have to go into a centralized exchange, whereas now, somebody with say MetaMask on their phone or anything like that, there's so much liquidity in that total value locked on protocols like Curve and Balancer and Uniswap that you can sell out very large sizes of your positions into stable coins in just as long as it takes for the transaction to confirm. And I think that's also played out a little bit in that retail spot market, as they see, crypto Twitter, perhaps some fear or FUD happening there, and they exit much faster than they would have previously.
Totally. I think all of them kind of compound or just add more fuel to the fire, right? So that definitely happens, right? So we're definitely seeing that. And then last but not the least, I'm going to jump into the charts because we're here to see the price action. But just it was good to kind of share these because it's important to understand the larger context, right? So the other piece to keep in mind is that some of these trading firms today, right, and some of these didn't exist back. Definitely they weren't around in 2013, and even in 2017, I think they were barely entering or maybe entered after that. But let's say funds like Alameda, right, the one that runs FTX as well, the Salmon Company. So if you look at funds like those, they are, the two things that I take away. By the way, I'm all all praise for those kinds of funds because they are very smart and using very smart strategies, not trying to put them in any kind of bad light whatsoever. But what people don't understand is that those kinds of funds have two massive advantages over a lot of others who are pretending to be experts on crypto Twitter. And in fact, I would say three of them, three massive advantages. One is they're sitting on massive amounts of capital. The types of positions they can take and impact is very big, right? The second is a lot of their trades, in fact, everything practically from what I understand and know of is algorithmic, to the extent that they're not sitting there babysitting their trades and trying to figure out, and emotions drive it. They're really driving a strategy, right? And we saw this also with other ones. They're not the only ones. I mean, they're the big shop in the play, but even we had a guest a few months back, like Mike Van Rossum, one of the creators of the original trading bot Gecko, and he runs a smallish but a very promising fund, I think, or at least a trading desk called Folk Wong, I think, if I pronounce that correctly. And I think one of the things we heard from him, which is absolutely true, because this is how most people trade the fiat market, right, or the traditional hedge funds work like that, is they tend to remain algorithmic. Emotions don't have much of a place. And they also have a very smart strategy. In some cases, they're very hedged. In some cases, they have play and a counterplay, both going on at the same time. And then last but not the least, a lot of these trading houses or trading shops are trading with literally probability in mind. So they're not just playing the luck game. It's not about the fact that, hey, if I enter here, will I become rich overnight? I don't think they're playing that game at all.
Yeah. Right? Mike was pretty clear on not even playing the price action, right? It really was so much that was there in the arbitrage, and kind of not expecting a bear or bull trend to kind of drive profits from. Actually making profits whichever direction the market was moving. And
exactly.
Yeah, I think it's very smart.
Exactly. So I think it's a lot of like the game of probability and taking your bets, but taking your bets in a calculated algorithmic manner, right? And we saw that play out even last week. When this big sharp fall happened, for months, a lot of people on crypto Twitter were touting about this. Hey, we've got a buy wall, and so therefore nobody can drop the price of BTC below a certain value. Which is all good in a bull run. It's never wrong in a bull run. But the problem was that when it got tested, that actually created opportunities for arbitrage, because it was the immovable piece while the rest of the world was falling, and people took nice profits arbing against that buy wall on Bitfinex. And many of these algorithmic funds made some good amount of money just arbing against that Finex wall. So I don't know if that is really something that people understand, but I think that it has an impact on how the market behaves, and I think it will have a larger impact as as the future unfolds. So that's that's the reason I'm sort of just putting it out there.
Yeah, and I do think it does bring it to, okay, we might, as individuals, might be at a disadvantage, not having access to the same level of research or algorithms to inform us. But it does mean that at the very least, got to stay unemotional, not buy in or give too much credence to the narratives on crypto Twitter. And coming back to these types of technical analysis where we're looking at some fundamental basis to see how the market is trending. I think it's very important.
Yeah, 100%. Okay, so with that said, let's jump into the BTC price. Okay, and again, a reminder, we might say this a few times in the show. This is not investment advice, so keep that in mind. It's all educational. Ask us questions if you have. We are happy to share and answer everything that we know, everything that we understand, everything that we analyze. But make your own decision, make your own judgment. We are not investment advisors, and we're not asking you to buy and sell basis what we tell you, right? So that should be totally your decision. And then, of course, subscribe to our channels. Like us on Twitter, subscribe to our, follow us on Twitter, subscribe to us feed on YouTube, and that way you will not miss out on all the content that we are sharing now and in future. And we'll keep working through this right over the next multiple months and beyond.
Yeah, and we're going to have a newsletter out very shortly on our Substack, looking at some of the BTC valuation pre and post correction. So do subscribe over at Going Elliptic on Substack as well.
Yeah, that's true. And good point there. Paul, I had to rename that headline there. If you recall, we were
Yes.
calling it, you know, lull before the storm when we started writing it. And this was the time when BTC was struggling around the 60K mark. And then now I feel like we should call it lull after the storm because that's what we are expecting to happen.
Yes. Very, very good. All
Okay.
right.
So coming back to the price action, there are a few things I want to first sort of level set so everyone understands this. So the first thing before we get into what happened yesterday or where the price is, the best thing to do is to zoom out a little bit, right? So let's look at weekly and monthly levels, and I'm going to start with the month. Okay. And the reason I
Right.
say that is it becomes a little clearer, right? One is able to understand what has happened with the price. Where are we? Where were we and where are we, right? So if you think about it, this is your October timeframe, right? So September, October is when BTC was coming out of this 10,000 zone. It remained at that 10,000 for a long time after that massive fall of March. So where is our March 2020? March 2020, this is the downer. This is the absolute. No, this is 19. This is March. Yes.
Yeah.
So we went all the way bottom out here, right? And then we hovered around this and mostly around 10K. We went no further up till almost that September time frame. Starting October, we see this bull run, right? So if you start looking, this is monthly, right? So this gives a little bit of a better, higher level view here. So starting October, there are greens after greens after greens after greens with very big candles, massive candles here in few months. December, the very big green candle. This one is Feb, right? A nice green one in Jan itself, supporting December. And then a pretty nice green one in March. So if you really think about it, BTC went from about $10,000 to almost $60,000, 6 times, 6x in those about 4 or 5 month period, right? So this is green after green after green. And similarly, if you want to just look at it from a standpoint of weekly, you are going to see similar rhythm, but we'll get to it in a minute. And then after that, if you look at it, the 60,000 mark or that area around 60,000 became like a big area of resistance. It just could not break the 60,000, and if you logically think about it purely from a standpoint of buyers and sellers and the momentum in the market, it is not surprising, because once you have gone 6x, a lot of people who are eager to buy have probably already bought it, right? So it's not like people are sitting on infinite amounts of capital. Secondly, I think this is a point where even the most optimistic, the most positive on these assets, folks who are just sort of completely bought in, but entered perhaps in that 10,000 range and, were behind this green rally, the green candles, are thinking, hey, why don't I take a little profit, right? Why don't I
Yeah.
make some money here, right? Which is just logical, right? This is what you would do once you've 6x'd your portfolio, right? And I'm not saying everybody's 6xing it. Even if you came in here, you've doubled it or tripled it, right? So at this point in time, you're wondering, this is when the classic human psychology is saying, well, maybe let's take some profits, even if not for the entire portfolio, which is just fine and fair. That's how traders behave, right?
Yeah. And it's just unfortunate for everyone who entered after that, right? They're kind of only just hearing about it, or maybe they'd put off investing into crypto, thinking it was too risky, and then suddenly seeing so much upward price action, thinking, okay, well, I don't want to miss out. But those are the first to get hurt, really, in those last month.
100%. 100%. You're absolutely right. Right. So those who come in closer to the top, or at least when it's already overheated, usually unfortunately get the worst of it, right? And that's what we see happening, right? And a lot of people are very distressed and unhappy and have lost substantial amounts of money. And yeah, it's sad, but that's the cost one ends up paying if one enters any overheated market, not just BTC or any particular crypto, right?
True.
Now, what you see is after that, the month of April is very telling. And why it is telling is not because it has crashed, but this at a month level almost looks like a doji, right? Like it's a time of indecision. It's not really as flat as a doji. And yes, some people, the candlestick readers might argue with me saying, well, it's slightly broader and it's not less than 5%. But disregarding all of that, I think if you just look at it from a high level, again, sort of from a look at the forest, not the individual trees perspective, it's pretty clear that April was a period of uncertainty, a period of indecision. The traders on either side, buyers or sellers, couldn't make up their mind. Buyers weren't convinced, they need to push it up further. Sellers were selling some, but they were not also 100% convinced that they had to sell it all, right? Which is why we didn't see the massive sell-off in April. But what we'll see as we dig into the time frame is the pressure was building. The 60K sort of wall, if you may, or resistance area was becoming stronger. And in fact, the buying momentum was reducing steam, right? It was sort of just letting go and becoming weaker and weaker. And eventually, then, of course, we see this month of May where, sure, we have had the massive fall more recently, which everyone's shocked about. But that's the 19th of May, right? And today is the 23rd of May. But the journey began way earlier. Like if you were tracking and if you are understanding these charts, it was pretty clear from late April, and that's what we had been saying as well, that, hey, it doesn't look like the price is going to hold and there might be some correction. So that red candle had its origins way back in April. And it just kept on building from there, and we are here now, right? And if you look at it from a macro standpoint, we are exactly at the point where we were back in January. As if the months between Jan and now never happened, right? The price is pretty much right there, right? We went up and we are back down, right? So that's the kind of, again, monthly forest view, if you may, right? The high level view.
Yeah, and that's really useful because quite often, people don't go to anything longer than the daily charts when looking at these assets. So zooming right out to the month, I think, is a good practice to do on occasion. So how's that weekly kind of playing out? Do we see a little bit more of a narrative in there?
100%.
That kind of indecision through April is definitely there, right?
Correct. So that becomes very clear. And by the way, before I jump into the weekly, you make a great point there, Paul, that people are too narrowly focused. They're looking at hourly, they're looking at sometimes 15-minute charts. I see people going on Twitter saying, oh, I see 15-minute, there is basically a reversal, right? And people get excited about it. To tell you very truthfully, when the market is trending heavily, right, when it's either bullish, parabolic in one way up, or, it's just crashing and burning, trying to make decisions from one or two candles, or trying to just go very deep in and look at 15 minutes and try to determine more macro trends is not only incorrect, but it's absolutely dangerous. That's like the worst thing that a trader can do. Like, you should just never do that. Some of those things, at least I would never do that. That is just asking for trouble. You're just basically making the groundwork, or laying the groundwork for trouble, if you may, right? So the idea there is, if the macro energy is all negative, well, keep that in mind, right? So whatever you read, keep that as a backdrop. If the macro energy is all positive, same thing, keep that as the backdrop, and then study the price action with it, right? So that's important to sort of just keep in mind for sure. Okay. Coming back to your weekly chart that you mentioned. So at the weekly level, there is an interesting story here, as you mentioned, Paul. And the story here, which is very evident and interesting, is that we saw week on week, right? This is Feb. So the story started even earlier, right? Back in Feb, we were closing after 60K, right? And then the following week in Feb again, late Feb, we couldn't hold it, went back down, right? And then some more of this indecision, up and down and back and forth. And ultimately through this whole period, right? So we're looking at March, April, May, like almost 3 months, 3.5 months, right? Mid-Feb. 3.5 months of multiple attempts at trying to break the 60K with a small little fake out here, but we just couldn't hold it. And we are back down, right? Now, what does this tell us? So idea, sure, we can look at this. It's evident. Everybody can look at it in hindsight. And, what's the big deal here, right? Here's the question. So this is what we were trying to say when we were tweeting and saying, oh, I don't think this price will hold. Or, we see, like we had put some of these markers, which I've still left around here, like, hey, I think we are going to see 42K. And then, first we said we'll see 47K. Then we said we're likely going to see 42K. And then, more recently, we've said 31.51. And then we've also made some statements saying it's possible 29.222 would happen, right? And what we are saying in these is, like, these were the various points where they were possible support. So just looking at prior price action, those were in some sense the levels, right? Those were levels where it would hold a little bit. It may not go below that. But also, 60K was acting as a very strong resistance. There was just not enough, positive energy or buying energy to break that. So
Yeah.
that's the absolute clear sort of story here. It's a very clear mandate from the traders, right? Like, which one doesn't have to be surprised about. The other piece to keep in mind is that, obviously there's a lot of FUD, a lot of energy that has happened in this space over the last few months. If you look at this, just around this point, I think 30, 35K, this is where we started hearing about stories that, hey, Tesla has bought Bitcoin, and that, somehow that would lead to, a number of different corporate treasuries beginning to buy Bitcoin, which is basically the whole institutions are jumping in head over heels to go buy Bitcoin, right? So that narrative.
Yeah, we had MicroStrategy as well, definitely promoting that narrative very strongly, as they were doing exactly that. So
Correct, absolutely. Now I have a slight different theory on MicroStrategy, which maybe we can pick up in a little bit. But yeah, MicroStrategy was all behind it. Michael Saylor has become one big proponent about that, and he's in fact even borrowed, right, via sort of convertible notes and other mechanisms, and put money in Bitcoin. So he's certainly gone over aggressive. And you're right, with MicroStrategy, and then followed that with announcements that PayPal was going to support transactions of Bitcoin, and then Tesla was going to now buy, and Tesla did buy, right? Like they bought $1.5 billion worth of Bitcoin. The narrative really began to converge in the direction that every single corporate treasury is going to go and buy Bitcoin. Like, you're likely to see a lot of those on the balance sheets. People are rallying behind it. Now, I must mention that maybe it's still possible, right? Like in future, some part of it people might put into Bitcoin. One is not discounting that narrative as such. I don't think it's an incorrect narrative from a standpoint of, a much longer future. But the way to understand that is that, companies or treasuries don't just generally take all their liquid cash and put it into any investment, forget Bitcoin. Because ultimately that acts as working capital in most of the companies. Nobody's sitting on billions of dollars of excess capital that they don't know what to do. There are, of course, Apples of the world who have sat on billions of dollars of capital because they've had humongous amounts of profit, and yes, literally they don't know what to do, and they've just been sitting on it. But for the most part, I think a lot of companies either then use that capital to, put it to use of some form. They would engage in either buying out companies or buying back something else, like buying back shares, or they would also indulge in, maybe a small amount of it in some sort of liquid investment, right? Money market type of investments or something, right? And so, yeah, I can understand if you put 10% of that or something, maybe even smaller, in Bitcoin, assuming the liquidity exists, and you can get into it and out of it, and it's not hyper volatile. Because if it's hyper volatile and you are caught on the wrong side of the equation, well, you might be in a situation where your working capital doesn't exist anymore because it has halved, or something of that form, and then that would be worse for the company than having gained from a 2x upside, right? So,
well, and also if you think of the premise there being, do they have no better use for it? From quarter to quarter, they might have a better use for that money as well. So we shouldn't expect corporate treasuries to be this demand in the market, right? Because they can just as easily be on the sell side. So
100%.
it's not an always buying and growing segment of the crypto investor kind of sector.
Correct. And the other part that people discount is, if the market remains volatile like how we have seen, where it suddenly corrects, many of those holders would be the first to shed. I'm not trying to say that Tesla necessarily sold. I don't know, right? Like there are.
We'll find out.
Yeah, we'll find out, right? Exactly when they report, and there's been hypotheses around it. So I don't know that, but I just feel like in general it makes logical sense. Because if it's your working capital, if it's your spare cash that you will use for investments and running your own company, which is why you exist in the first place, and then if the price fluctuates rapidly against you, yeah, I can see a motive there, very clear motive to exit your position, or at least avoid the loss, right? Even if you're not making a huge amount of profit. This is where I also feel that I think some of these other narratives which have come up lately around counties or cities should hold it. And there are some of these mayors who have started now making the statements that I'm going to put my coffers from my city budget and put it in Bitcoin, or I'll pay my employees in Bitcoin. I think that becomes a little dangerous, honestly. And
Yeah.
if you ask me honestly, I think that's regressive from an overall monetary flow standpoint. I'm not against Bitcoin, by the way. We are not, right? I mean, we are all pro crypto people. We like crypto, and we play in it and invest in it. So definitely we are pro in this whole space, and we do think crypto will grow over a period of time. And I think there's a plenty of opportunity. Okay, there's a lot going to happen. But I think one should look at crypto as an alternative investment, not as a replacement for your most liquid cash that you need to run your day-to-day operations. I think that is dangerous in at least my mind, right? Because then you are putting yourself in a corner where you fear the volatility. You should, in fact, at some level, if you're in cryptocurrency, you should enjoy the volatility. Now, this might sound very negative, and I know most people right now might be willing to beat me up for making that statement because nobody's enjoying the volatility at the moment. But the fact is, the reason something goes up 2x is also because it can fall down 2x, right? So that's like the two sides of the same coin. I mean, we all enjoy when it goes up 2x and 3x and 5x. But the only reason it goes up 2x and 5x and 3x in short periods of time is because it's volatile. And it can also go down 2x and 5x and 3x in a similar short period of time, right? So that's just the nature of the game. That's what it is. And so it's not appropriate for some situations, for sure. Anyway, bringing it back here. So let's stay focused here and come back quickly here. So now when you start looking at daily, and having given all that backdrop, I'm going to zero in a little bit here so we can see. We see days of struggle around 60K. Then, of course, we see this big fall, right, which was building, as you see, as I was saying earlier, right? Almost here. It had started building here, right? It went through one fall, came back a little bit, struggled, and then, down, down, and down, right? With this massive big red candle, which I believe is one of the longest ones. So one of the largest candles in BTC history, if not the largest candle. And then we were down and we touched 30,000, right? Or 30,150. So where does it go from here? What does it look like? So just looking at the charts, firstly, it's still early. There are only a few candles since this big crash down below 40K. So don't read too much, let it unfold, right? It definitely is looking bearish now because at least for the last now 5 days, it has remained below EMA 200 and is not looking like it's suddenly going to go back up with a huge amount of confidence. What we are likely to see is some pullback, some bouncing off, which might be temporary in the sense that, obviously after a lot of selling, some might just step in and we might see the price bounce back maybe up to 47K. It's possible. In fact, I wouldn't be surprised at all if this 47K becomes like an area of resistance, that it could go as far as up here and then, maybe come back down.
Sure.
Now, the question is, where does it go in terms of the downside movement right now? So there's definitely, again, just looking at price action, we're not trying to predict the future. We don't know. We feel like this 40K area might end up becoming a zone like what we saw with 60K. So that's basically something to look at, which is why I drew out this rectangle as well. So we saw the 60K becoming like a big hurdle and then therefore becoming the primary input into the price action. Belief is 40K would become that sort of a area, right? Area of value, if you may, right? Where either it breaks upwards of that and goes back up, or just can't break it and it just keeps going back down. Now the question is, does it break 30K? Does it go below 30K? I feel there's a chance. There's a high probability it could break below 30K purely because the speed at which bearish momentum has built up over the last few days is quite high. A lot of people are feeling very bearish, and it's just the emotional momentum that might break the price below 30K. But I do feel that I think this 22, 23K is the rock bottom. I'm not convinced it's going to break below this 22, 23K. But there is a chance, there is a high probability and a high chance that the price would see some rapid movement up and down. Obviously it will remain volatile with, keep an eye on this 40K area. And then of course, there might be a candle or two over the next few days that might test all the way down here to this 22, 23K range. and then possibly bounce back from there, right? So that's the thought. That's what I'm thinking here.
Yep.
Okay. Yeah, and then just one more bit, and then let's go a little faster here, right? In the mood to cover a few more of these, right? So if you look at ETH, yeah, what do you think of ETH, Paul? How is this behaving? We looked at BTC, the story there. What about ETH? What do you think?
Yeah, on those daily candles, we're only just touching the 200 EMA, today, in fact. So up until that point, like it's still very highly correlated with Bitcoin, and obviously, we're not seeing some of the signs of divergence that we were seeing on the way up prior to a few weeks ago. But yeah, definitely, there is slightly different sizes in both the volumes and the lengths of the candles, sometimes more volatile. So yeah, it's struggling to find its price in between that 250 MA.
Correct. Yeah, absolutely. I think you said it. There's also evident that from the all-time high, we are seeing, a big retracement. This is just the fib levels that have been charted, and so we are definitely below the 0.618, the classic 60% plus retracement, and in fact,
Yep.
hovering between 0.618 and 0.786. Right. So these are like the important watermarks, if you may. I've drawn some horizontal lines here. I do feel that these are some price points to watch. Again, these were support levels or resistance levels in the past. So one is around the 1900 zone, the 1949 zone, which was breached, right, for some time, and now we are back up above that. So keep an eye on this 1900 zone. If it cannot hold it and keeps falling down, there is a good chance it might go all the way down to 1000, right? And it's even possible it will come between the 758 and 1049. Those are the 2 points that I've drawn looking at past data, right? The past levels of support and resistance. And I feel like it is quite possible it will come between 758 and 1049. Now, as Paul just mentioned, a lot of this is going to be a function of what BTC does, and of course the correlation between the two, right? So if BTC keeps falling and crashing and BTC is going to see 2300, as we just looked at, I think if that happens, ETH is definitely going to see that 750 as well, and it will just be the pressure of the market that will take it down with it. Yeah, that's what I think. What do you think about EIP 1559? Do you think that may have an impact, because that's coming soon, right? This June-July timeframe will have EIP 1559. This current crash would have settled a little bit by then.
Yeah, I think it only makes a big or meaningful difference when people are still transacting, right? It is the transaction volume on Ethereum is somewhat related to the amount of volatility, but when people are exiting positions, gas prices is less of a concern. They're wanting to exit fast. So I think, yeah, it won't have as much of a difference now as it perhaps might have if we were still in a bullish market and we were reducing the gas costs. The other interesting thing for me is looking at the total value locked in DeFi. We were very close to seeing 90 billion of value locked just on the Ethereum network. We're currently less than half that, so we've dropped below 40 billion. And yeah, it will be very interesting if we quite quickly went down to 750 price point for Ethereum. Then we could end up seeing more value locked from stablecoins and other assets on Ethereum than the total market cap of Ethereum itself. So yeah, really interesting times.
Interesting. Yeah, so you're essentially saying, in other words, almost like a company's value is lower than what it's holding on its balance sheet, right? It's kind of comparable in that sense, in a weird way.
Yeah, and I expected that to be a milestone, if you like, of just so much more value coming onto the Ethereum network towards the latter part of this year, that's when we would see this. But actually, it can happen in the reverse, when the price of ETH goes low enough and the value of those stable coins and other assets are not as low. So yeah, it'll be really interesting to see if we do kind of get to that real not doomsday, but definitely extreme bearish point there.
Yeah. No, good point. Something to again, look out for. The other piece that I wonder about is what would happen to the so-called DeFi summers of 2021. I mean, we saw the DeFi summers of 2020, and there is this little hypothesis that it might be repeat of the summers, and we might see more innovation in DeFi, which is not, unbelievable. It's possible because there's a lot going on in DeFi. That might also perhaps have an impact, right, on the price.
Yeah, and it is interesting because through that, DeFi summer, people were starting to look at more fundamental measures of value for some of those tokens. So price over earnings or price over sales. And those ratios are now looking very attractive because, the prices have fallen, but the actual earnings of those protocols or the sales going through from the token fees are still relatively high, especially the ones that are helping people transact out of, say, ETH into stable coins, or to put stablecoin holdings that might be much larger now to use in lending and those other kind of protocol level functions. So it'll be really interesting to see whether those fundamentals become even more center stage rather than the price of each token.
No, that's a very, very good point. And in fact, this reminds me of a session that Felix, the guy, Felix Hartman, who we had on our own show, and he was a great guest early on, was on a show on Pomp Show, on Anthony Pompliano's show recently. And they touched upon this DeFi and the amount of money that DeFi protocols are making. And I think Felix made a fantastic point there. And again, the specifics I don't remember, but I think the gist of it was that Maker is making money which is comparable to large banks. So if you start looking at a decent size and a large bank, the kinds of profit, the kinds of money they're making, well, Maker is making today with a lot less capital base, if you may, right? And so if you just look at the efficiency of capital and just the overall profitability, the DeFi tokens are looking a lot more like, a profitable, more efficient version of traditional finance. Right. So that was his kind of play. And I think that, that's fair. And if that's the case, well, then I think you should have to start looking at valuations slightly differently for at least those, assets or those protocols. So something to bear in mind.
Yeah, and perhaps price over total value locked is another kind of metric there. If a protocol itself has captured a certain amount of value and is able to use that efficiently, then that's a better comparable to compare between other DeFi assets of a similar nature, say in the lending class, than just this one's gone up, 2x in the last month in terms of price, right? It's totally much more about the fundamentals.
Yeah, totally. So I think we owe our listeners a session on that in a future episode. I think we can probably focus on that whole fundamental valuation, if you may, right? Like price to TVL, price to overall profitability and sales, if you may, P2S, and just how to value DeFi. What are the different ways one could look at? So maybe we'll pick that up. I think it's a great topic, something that we have been discussing quite a bit internally anyway, but something worth sharing with the broader audience.
Absolutely.
Okay. So in the interest of time, I'm going to run a little faster now. Must also mention that as we get into the alts, bear in mind that the markets are highly correlated. So there is not much you're going to get out of trying to understand each individual price action. We'll look at some key price points there that you should probably just bear in mind, but do remember that a lot of these would be influenced by the macro picture, which is whatever happens with BTC and ETH, everything else that we see now is likely to just follow that, follow whatever the leaders are doing. There's going to be a little bit of a herd mentality here, right? If you may. Okay, so let's look at BNB. BNB was the poster child of this bull run. I would say, I think in this bull run, apart from BTC and ETH, one of the biggest ones that really came front and center was BNB. I must mention the bull run is not over yet. We are seeing first signs of the bearish reversal, but who knows? Things can still turn around and we might see another big sort of surge upwards. But having said that, in the current piece, this is a inverted V, if you may, right? We saw the price rise up, for BNB, go up multiple times, touched all the way close to almost 700, right? This was way up there, and then now it's back in the territory of around 200 something, 250 odd range. Do bear in mind that BNB started its journey much lower down in the sub 100 territory earlier this year, and then this rapid rise to 700 all happened within the last 3-4 months. I do see that it had hovered a lot around 224, which is something that I'd kind of called out and seen yesterday as well. And I would watch this. 224 is a possible area of support, unless, of course, as we were saying a little while back, if the world is crashing down and BTC and ETH aren't able to hold it, I don't think BNB will be the solitary one just standing behind around 224. It will also probably go down with them, and we'll see it retesting its earlier levels, which might be 100 or even lower, right? So just something to bear in mind. But keep an eye on the 224 number. That's all that one should look at. Let's jump to Solana. Solana, another one, poster child of this growth. Interesting new chain, lots of excitement around this, lots of support from FTX and Alameda and others who are in love with Solana. Definitely, again, a massive run, went all the way up to close to $60, I think $55, $58. Very sharp pullback, very sharp retracement since then, and we are right now hanging around that EMA 200 mark, which barely started drawing for it because it's not a very old token. And this is the price point, right? 19 roughly is where it is at its EMA 200 mark, right? And I have a feeling that it will kind of follow ETH. ETH is sort of like this. If you remember, ETH is exactly there, right? Just about breached EMA 200. Solana is sort of mimicking it, right? And so if ETH falls below EMA 200, I wouldn't be surprised if Solana goes down with it.
Yeah, that's a fair point.
Yeah, what I would do is I'll just draw one line before I move forward. Is this seems like an area of support. I'm just looking at some of these candles, just roughly drawing here. $12, right? $12 and a change, $12.41 is where seems like we did see a lot of price action early on, right, in Feb and March. And if it's falling next, it's probably going to maybe find this as area of support for some time. Much of this is unknown. We'll look at how BTC ETH behave, but keep an eye on these. Keep an eye on EMA 200. Watch it carefully, see how the price action happens. Watch ETH, because it's going to follow ETH. And if it's falling down, here is another, sort of area of value around $12 and a change. Let's also jump to DOT very quickly. Another one, massive rise. This one, in fact, started rising a little earlier in the leg before the Solanas and BNBs of the world took over. Big jump all the way up again, closer to $50, 49 and a change. Started down in sub, I think, $1 territory early on, and then of course was hovering around the $4-5 mark. Right now at about $17. Here I think there are two price points that I had mapped out, which one should watch out for as the price corrects. The price is below EMA 200, so this is also kind of tracking bearish, like BTC and a few others. But again, only 3-4 candles, so don't read too much. Be careful, watch carefully. Look out for 10 and 38, and then the other one I drew was 6 and 68. So this range is possible. It's possible we might get into this range. The reason I also feel we might get into this range is that when the market started correcting, we saw very big volume around the sale. People really dumped hard on DOT. So if you look at it, these were some of the biggest volume days. The days that it dumped the most, I think they were the highest volume ever in its trading history. So people really dumped hard on DOT.
Yeah, that's got to be driven a lot by fear, right? And
correct. Totally.
It's not looking healthy.
It's not looking healthy. And I think, again, like Solana and BNB, I think they will all go in the same herd. So it's like ETH, the leader of the pack, right? The bellwether, if you may, the right up front. And then you will have BNB, Solana, DOT. Everybody's going to be on that same journey one way or the other, right? Yeah. But keep this 10 and 6.6 in value. This is no investment advice. I want to say that a few times. But if I were to trade DOT, I would definitely keep an eye here and maybe even try and pick up some buys here if it makes sense, if the broader market seems to be stabilizing a bit. Do bear in mind that, we are not one of those people who try to either find tops or bottoms. We are not one of those traders, right? We try to find value at all price points. You might be different, so make your own decision. One small piece of just sharing a small piece of thing that we go by is that at every price point there is value, there's relative value. If you think where the market is moving and what's going on, and we just feel like 6.6 to 10.3 seems like a decent range if the market settles. Now, if the market settles is a very important part of the puzzle. So keep that in mind.
Yeah, and also if you are exposed to any of these, you've got to look at everything else that's happening in the community. So if you're going to, say pick up some dots, you want to be closely following their development and their adoption and all these other metrics that aren't here in the chain. So that's sometimes also another point of value that you've got to then bring to these types of charts. You can't look at it in isolation.
100%. I think that's a very valid point, especially becomes even more relevant when we get into more sane territory, right? So when it's bullish and everybody's just looking at price action, they forget about these fundamentals. How many apps are actually built? Who's using it, right? Like these very basic one things get forgotten. But when reality strikes, I think they become even more important. So do keep an eye on it. See what's going on, right, on each of these chains. Okay. So yeah, let's jump into some of these DeFi now, right? And again, people have asked us also to look at Rune and FTM, but there is no different. I'm really going to click through it, but you'll see it, right? Like there's no point even discussing these. They're all following the herd at this point in time, and everybody is, below EMA 200. Some of them even don't even have data points like Rune for EMA 200 properly to be used, but it's definitely looking super bearish, right, at this point in time, and they'll follow the crowd. Let's jump to the DeFi tokens. I think Aave is one that a lot of people asked for. Now here there's a slight difference in Aave. Yeah, so you were saying something, Paul. Yeah.
Well, and also one that has taken a lot of criticism during this fall. A lot of people kind of going, the liquidations were a lot faster. Perhaps the risk parameters weren't as suited or as hardened as they should be for the real volatility of the market. So I think Aave taking a little bit more of a hit this last week than perhaps some of the others.
True. Yeah, absolutely. I mean, those sentiments really play a role. I must mention though that I'm just wearing a trader's hat for a minute, or somebody who likes to study the markets. I'm very pleasantly surprised with the small lack of correlation between these DeFi assets and the broader rest of the crypto market. So if you look at this chart, right, everything was either going up or going down, but Aave has been in this sort of range bound up and down territory for a while now. It's not new for it.
Yeah, no, that's price discovery for something, and again, we talk about DeFi being this, obviously past few years of innovation, but becoming and, starting to replace things like banks or lending institutions. And therefore the price of their tokens shouldn't be too correlated to the broader crypto market. It's still volatile, absolutely. It's like valuing a startup. It can go all over the place, but what we're seeing is still a range of value for Aave.
Totally, yeah. And in fact, that between 302 and 420, the 300 to 420 range, that seems still intact, right? We saw the price drop. Of course, we've seen some spikes above that for a period when the market was going crazy, and we've also seen the big drop. But if you look at, again, sort of step back a little bit, zoom out a little bit, and look at this price action over the last multiple days, last 3-4 months, it has been sort of bound between 302 and 420. It's nicely moving in this range. And in fact, in a weird way, this should be a swing trader's delight, because it seems to swing down and swing up and swing down and swing up and swing down and swing up, right? And in this case, mostly around EMA 50 for a long time. And now, of course, it's closer to EMA 200. So if somehow the token behavior is retained, and we don't know that yet, right, where it's swinging up and down between certain sort of price points in a range, it will remain an interesting scalpers or swing traders light, right? They can keep trading it all day long. Yeah. Okay. Let's look at Maker and SNX very quickly. Maker has had slightly different journey. It's not as much as Aave. Aave has been in that range. Maker saw a little spike up and spike down, but it just seems to be tracking a little bit more, at least more recently, like ETH. just about testing EMA 200. Of course, saw the big drop. And it's a little unclear where this will go, honestly, just looking at the charts. The charts isn't really telling anything major. It did see some of this resistance around the price points it's sitting at right now, right? The 2,700 or so price point. It did see some resistance here, and we'll see how it unfolds.
Yeah, another interesting thing with Maker is obviously they have at a protocol level, they burn the Maker token, right? And
Correct.
So the supply reduces. And I think it's still very hard for token holders or people, kind of looking at this to see, unless you were able to chart how much was burnt of the token, how the supply changed and actually adjust for it. It has a not insignificant impact on the fundamentals, but it's not always clear to token holders how to apply that and what that means potentially for the future price. So I'd say my kind of rough feel for that is that what we're seeing here isn't actually accounting for the kind of burning of Maker. All right, we've lost Shashank. He's coming back. Just going to add him back to the stream.
Yeah,
cool.
Sorry about
Welcome
that.
back. That's okay.
Yeah. Let me reshare that as well. Yeah, continue. So you were talking about the whole.
Yeah, and was saying there, I just think the current prices at those last few days is not factoring in, the dramatic reduction in supply as a result of that burning that had to happen with the amount of liquidations that were there. So.
Yeah, no, totally and truly. And I think that the important piece there is maybe somebody needs to model it out like the stock to flow type of model. I mean, this will be looked at more like from a corporate, a security, if you may. I don't want to call it that because, that's a dangerous sort of area to get into purely from a regulatory standpoint. But from a just modeling standpoint of valuing that asset, I think it is not surprising that one should look at it like that, right? Because there is a certain amount in circulation and then, some amount gets burnt and removed. So I just feel like, that's interesting. I would assume that a lot of these maxis who like supply reduction should be happy and excited about that, perhaps.
Yeah, yep. And time will tell. I think if we check in another week, that might have caught up and been priced in by then.
Possibly, yeah. Okay, let's get to SNX quickly. SNX and Link. Oh, there you go. So SNX is very much like Aave, if you look at it, right? Swing up, swing down, back and forth. I think here the price points are really 14 and 24 looks like. This is the interesting price point here, or maybe 23. Let me just draw this very quickly. But this is very Aave-like in its overall market behavior. Is a bit tricky. Let's see. Okay, let's take this 22. Okay, roughly, right? So this is where we see this range. It swings up and down in this range, and then of course, right now it's dropping. So yeah, this is below that range at the moment, $11 or so. But yeah, SNX seems to have similar economics and similar price outlook. Jumping on to Link. Okay, so Link is another one. This is an interesting one. It has really gone a long way. Link's journey, as I think we were looking at a couple of days back, is slightly different from the pack. Link really also started his journey with the DeFi summers of 2020. Price action really started going into positive territory late last July, August timeframe. And, ever since, barring this little period of, just sort of platitude or, sort of calm here, it has seen a lot of rapid momentum. Where we see today is it's sort of come all the way back down to where it was in August or September of last year. So really, it looks like this journey never happened for Link, right?
Yeah.
So that's that. I don't know what that means for Link really, but it's unfortunate.
Well, and it's amazing as well because a big part of that latest spike up was a pretty major V2 announcement. That they've been working away on. This is a team that does actually really deliver a valuable product to the entire ecosystem, and the V2, rightly created some excitement and demand for it, and it just doesn't match with what we're seeing now with this big drop down in the price. However, we do also know that there's quite a broad spectrum of link holders, right? So, we know them as link Marines, and that distribution out into many smaller investors' hands does potentially mean that a little bit of uncertainty or fear, and they're flushed out quite quickly.
Yeah, that's true. All great points. So yeah, we got to keep watching the link price action. But again, like we've said a few times, market is highly correlated, and these asset classes, or these assets rather, are going to follow the leaders. Right now, it's possible link might go a little bit more the DeFi way, where it might not see that sharp movement up or down, but we will see which direction and how that market structure emerges over a period of time. Okay, what do we have next, Paul? I think we said we'll cover a couple of more. I know we've almost run the hour, so it's an unusually longish session, but let's do it. Let's quickly cover some before we wrap up.
Yeah, there were a few more that people had requested there as well. I think comp was another one that was requested on Twitter, and expect should look fairly similar there. Okay.
Correct. Yeah. So I think we've got a couple of more. And again, if I've forgotten, and if listeners, you're around and there are specific one, do chime in. We'd be happy to look at it quickly. But I think there is Comp, Ray, and Litecoin. So let me quickly run through these three. Comp is part of the DeFi pack, right? So Comp price action looks very much like, again, a lot of these DeFi tokens. It also saw a big spike up, kind of like Link. And I don't know for sure why this happened. It may just be the market's energy. I don't know if Comp really changed the protocol or did something, but at this point in time, it certainly is back into the red zone, right? So that's what we're seeing. We're not learning anything particularly new from just looking at this Comp price action at the moment. Okay, jumping on to Ray. Ray's AMM marketplace, and well, Ray looked promising because it was one of those came part of this new surge bull run, sort of born in that era. Not too much data point there, so you can't really read too much into it. But again, it was showing some nice, healthy momentum. It was between this $7 and $12 range for the most part, spiked above that, but then it hasn't been able to hold strong while the market is crashing. I think I was looking at it and I was thinking $4 would be a good price of value, but it's below $4 right now. So hard to tell what the right price for something as new as this token would be, but certainly it will remain discounted until the broader market sort of changes direction.
Yeah, and I guess a lot of the hope there with any new one is that they would steal some total value locked from other swap protocols.
Correct.
Similar to how Sushi did from Uniswap, and that's a lot harder to do in a bear market. So I don't think there's necessarily a target price for Ray now until we see actual adoption.
Totally. I'm with you on that one. Okay, let's look at one Dino coin, as people like to call it now, Litecoin, right?
Silver to Bitcoin's gold, if you recall 2012 and 2013.
That's true. That is another piece that I just want to segue into very briefly. So the attention span in crypto is very short, right? We have seen these tokens that become superstars, everyone rallies behind it, and then they're totally forgotten, right? So as you rightly said, there was a narrative of gold and silver back in the day. Litecoin was quite a thing. There were other also, BSV, BCH, what have you, right? Like all of them used to be attention grabbers. Most of them are not top of mind anymore. They're not even perhaps in the top 10, most of these. And then the other part is, and then we saw the second emergence where we saw coins like EOS and others come in, and they were the big poster child of tomorrow's, the world internet computer, if you may. That wasn't realized, and looks like they've also kind of now lost in oblivion. And now we have the third generation, if you may, of all these Solanas and the new BSC and the Runes, FTMs, and so on and so forth, right, that are emerging. So it'll be interesting to see, as we move forward into the future, this year and beyond, over the next few years, I would say even the next 2-3 years, let's see what the future unfolds, right? Like which coins still remain, and will coins like Litecoin and others even be remembered by then? And also, will some of that flippening happen, where BTC also becomes less important as more and more of these different asset classes grow? Okay, so going back to this, Litecoin kind of picked up with the rest of the crypto market. Did not see the same level of energy. I'm pretty sure that some of these newer players who came in, the newer retail, who are all enamored by the the dog coins, if you may, right? So
Yeah.
they probably didn't even notice Litecoin, but it did see some, right? It was spiking up
Litecoin,
and down. Mhm.
Litecoin mining mostly merge mines with Doge. So there is some, kind of benefit to Litecoin when Doge was going up, as it was
Oh, nice.
additional profit for Litecoin miners. So that might have taken some of the sell pressure from Litecoin miners having to sell their Litecoin to just selling the extra Doge in their wallets instead.
Yeah.
But yeah, I'd say with the decline of Doge, also in recent weeks, it's taken a hit, and now Litecoin following suit. I do think there wasn't any real fundamental reason for Litecoin to break upwards as it had done.
Absolutely. Yeah. And, it had tested this EMA 50 a few times. We saw that still remaining positive. But now, of course, that story is all gone. Since, in fact, early May. So it's not even just right now, but since early May, when Bitcoin started correcting, I think with it, Litecoin went down. And then, of course, right now it's seeing some bottoms closer to 136. I will not be surprised if we get back to this $100 territory, right? So
Yep.
here, if you go, I'm just going to draw a line here. This is a past area of resistance of $89, right? It was tested multiple times in the past, November and December, and perhaps you may have seen this in the past as well, like all the way back, because since this is
Yeah,
the
that's what I
dino
was
coin.
thinking.
Yeah.
Around about that $89 to $100 was very much a point for Litecoin many moons ago.
Correct, exactly. So you see this, this price point has happened, right? Like you said, many moons ago. So so I would not be surprised if we go back to that 89 to 100 range, right? Again, one more time, before we find some new direction for Litecoin. And maybe it'll find some direction with Doge again. Who knows? The Doge story has not completed. Elon still is tweeting about Doge, and maybe he'll find a way to make Doge popular again. Who knows?
Yeah, and I've seen some analysts as well pointing to, kind of dog coins almost being their own subclass of meme coins within our crypto asset nomenclature. So, if it becomes a class, who knows how that class will get traded, or how that'll continue, or will it go the way of a lot of the identity tokens that have all but disappeared now?
Yeah. No, there's great sort of thinking around it. We'll see. We'll see. Future will tell us, right? Like the market will tell us and educate us. But something to keep an eye out for, and we'll see what happens to the dog category and to all these new things that have emerged, right, over this cycle rather. And as we've been saying, the cycle's still not over. We don't know, but certainly the winds seem to be turning, and at the moment it's in complete turmoil. And we'll see where it's headed. We'll all figure out.
Yeah, the only thing we can be sure of is, this time next week we'll be looking at the charts again, and we can't predict the future, but we can, look at what has happened, and try to look at some of the fundamental reasons behind it. So, very much thankful for all of your insight and analysis there, Shanky, and yet another charted session for Going Elliptic.
Absolutely. Well, thank you so much, Paul. It's always fun, I think. And like you said, we will come back to it next week and we'll look at it. And for our listeners, stay calm, stay patient. This is not investment advice, but what we can definitely say from our own experience is that let things play out. Don't jump into things. Understand, don't try to predict, react, right? And don't try to overbuy into any thesis or model, right? Like use your own judgment. Whatever that is, reason for yourself, and stay with it. And then last but not the least, I'm going to just end this with a little piece that has been stuck in my mind for decades now. Is a long time back, the very famous sort of quant trader on Wall Street. In fact, he was in London, a guy who goes by the name of Paul Wilmot, who wrote a lot of books also on quantitative finance. And he was a guy who made money out of making quantitative models, but he was kind of suspicious of quantitative models. It was an interesting dichotomy that he lived in. And he made a great point. He said, if anybody was to walk on a tightrope over Niagara Falls, and for people who know Niagara Falls or have been there, it's super dangerous. It's a steep fall all the way down. He said, you have to have a safety net. And if you won't have a safety net, it would be just absolute stupid and dumb to do that, to just walk on a tightrope. But you don't know, you're not tried it. So you don't know if you'll survive if you actually fall with that safety net. And most of the financial models are like that safety net, but just that they're actually not even a safety net, but just a hologram. So that used to be his way of thinking. So remember that, not trying to scare anyone, but all these models and theses are kind of like that. When they play out and they play out in your favor, sure, we all celebrate, they're all fantastic, but don't hold by them. And remember that this has played out a few times, right? Just like that buy wall that couldn't hold it, there are many other theses like that that aren't necessarily going to be true.
Yeah.
So take them with a pinch of salt, right? Like be cautious as you go through it.
Absolutely. It's still very sage advice, even more so in the crypto markets. So yeah, be safe out there, everyone. Don't go with your emotions or just the latest FUD on crypto Twitter. And hopefully you've learned something from this episode. If you have, please do like, subscribe, and join us for the next installment. Until then, go well. Thanks, Shanky.
Thank you, Paul.